Secret tapes. They're usually straight out of Hollywood. Today, Wall Street has its own version. Audio recordings obtained by the journalism group ProPublica of meetings between the Federal Reserve Bank of New York and Goldman Sachs allegedly show what many Fed critics have been concerned about, that regulators may be too cozy with those they oversee. The tapes were made by Carmen Segarra, a former New York Fed bank examiner who worked out of Goldman Sachs. That was the bank she was assigned to in 2011 and 2012. Segarra says she found cases where Goldman appeared to be engaged in questionable activities, but then felt pushback in her attempts to correct them. In one case, Segarra concluded that Goldman did not have the required firm-wide conflict of interest policy. She then began recording numerous meetings, roughly 45 hours worth, when she felt her opinions weren't going over well with her bosses back at the New York Fed. The Fed, by the way, categorically rejects the allegations. Goldman Sachs refutes the notion that there was no conflict of interest policy in place. Segarra was let go after 7 months and then sued her former employer. It's also worth noting that in 2009, the New York Fed commissioned a report to look at its role in the financial crisis. The report, conducted by a Columbia University finance professor, concluded that the biggest issue the New York Fed faced when overseeing some of the country's biggest banks was its own culture, where examiners didn't speak up and where supervisors pay excessive deference to the banks. This is a story that is likely far from over.